Hello and welcome to a fresh new edition of Bazaar Morning Call. I'm Prashant, with me my colleagues Nigel and Reema. Good morning, guys.
Hi.
New highs in the bag, and we are looking ahead with some optimism, some caution as well. US equities are down, and they're down sharply actually, 1.5% in the S&P, the Nasdaq down a little bit more. You have the dollar, which is risen once again. It's bounced off important levels. It's technically looking like it's going higher, and SGX is indicating a lower start. The last I checked, by about 50, 60 odd points, just under 18,700. I mean, starts are one thing, closings are another, like yesterday showed us. So will we see a repeat, a lower start, which, slowly but steadily gets bought through the course of the day? That's the question we'll try and answer. The global picture is not very comforting, and that's, I think, also needs to be highlighted. We'll do that. That's the dollar index, which actually bounced off. It's not going one way south. There is some support which is coming in. Good morning, guys.
Hi, good morning. So yesterday, there were two reasons attributed to that 1.5% sell-off in the U.S. markets. One, the COVID protests in China, and two, the hawkish comments from a lot of the Federal Reserve's William as well as Bullard. Both of them seem to indicate that we are going to get higher rates for longer, for an elevated period of time. But just take a look at the Asian markets this morning, right? So while the COVID protests brought down the house down in the U.S. markets this morning, Hang Seng is up nearly about 3%. The Chinese markets are up close to about 1%. And even the Taiwanese markets and the Korean markets, which have great linkages with the economy in China, are currently up in the green. That said, the SGX Nifty is still down close to about 60 odd points. But let's see whether we can attempt a bit of a rebound after opening slightly subdued. But a quick word on the kind of flows that we had yesterday. Both the FIs and the DIIs were buyers in the cash market. The net institutional buy figure was in excess of close to about 1,000 crore rupees. Perhaps there is a lot to do with the MSCI rebalance. Nimesh indicated in the dealing room yesterday, when we chatted with him, that, the MSCI rebalance would have resulted in inflows into our markets. They come into effect from 30th of November, so perhaps that influenced the kind of flows that we had. And just one more word, take a look at Reliance. Reliance single-handedly pulled up our markets, or supported our markets yesterday, and that's the turnover on Reliance. Nearly 4,000 crore, and off that, close to about 2,000 crore was marked for delivery just on NSE. So I'm not even taking into account BSE, but that was Reliance for you.
4-month high volumes yesterday on Reliance, and had it not been for Reliance, the market would have been down. I mean, actually big time down, because it was the only thing which was holding up things. I'll get to Reliance in a bit, but just a quick word. So you have the S&P and the Nasdaq both down 1.5% each. The dollar index has completed what is basically known as a bullish outside day. It's closed above the Friday's close. So that is a bullish signal, and it's usually followed by more gains. So we'll see, which is not good news. I mean, if it kind of follows through. The only good thing about the dollar index is that the bulk of the move has come through because the euro has fallen. Euro is about 60% weightage in the dollar index, and it's euro's fall which has pushed the dollar higher. So I think that is it's not as if money is going into US assets in any big way. It's just that the euro saw some weakness after the rally recently, so it's pushed up the USD. S&P E-mini futures have completed a bearish outside day, and this is the most widely traded contract, and in the world, and that is going the other way. Now again, volumes were not all that great. Volumes have been better earlier, and as we go into the close of the year, volumes will be lackluster. So take it with a pinch of salt, but this is what we've seen. We've seen a negative signal. On the E-mini futures, the 100-day stands at 3924, and that's the level. About 40 points or so is what you want to see if that level holds. So far, it has. China's COVID-19 situation remains top of mind for global investors. Absolutely. I mean, you had headlines yesterday, for example, from companies like Apple, etc., which saying that maybe Apple is not going to be able to meet their latest iPhone 14 production targets, quotas, etc. By the way, Reema did mention that Hang Seng is up 4%. There are some measures for the property sector which China has announced, and maybe that is essentially what is resulting in this move in Hang Seng and Asian markets. Nifty yesterday made a high, led by Reliance, and then also cooled off. I mean, we were nowhere close to the day's high on the index. Even on Nifty, volumes were not all that great. Volumes actually, we saw a breakout above the trend line, but not quite so as far as volumes are concerned. As I said, Reliance volumes were huge, of course, and without Reliance, the market would not have broken out into new highs. So the new level to watch, of course, is 18,614. And above that, I mean, the level to watch is 18,639. I mean, that's the level to take out really if there is momentum which comes back in. That's the weekly upper Bollinger Band level, which you want to take out, 18,640 broadly. And supports come in at about 18,420. This is the broad breakout zone from where the Nifty started moving higher. So, I mean, if you're so inclined to try and see if, dip buying comes back, I mean, you'd be better advised to kind of find prices around that 18,420 or maybe around that to see if it works once again. But be mindful of the global picture as well, which, I mean, US, for example, US indices were not doing very much, but yesterday they were decisively down by about 1.5%. So maybe wait it out the first couple of hours before you read the texture of the market and decide what you want to do. Najib, what are you watching?
Well, the market continues to be in buy and dips mode, right? But I think in the near term, maybe some bit of consolidation, a bit of a pause on the Nifty. That's something that maybe we could look forward to. And the global picture, well, there are two fears that crept up overnight, supply chain issues. And the other factor is the Fed's hawkish tone. Yesterday's recap, well, the Nifty, everyone's celebrating. We hit a half a century yesterday, but stripped of Reliance, actually, we would be down closer around 20 points or so. You need to take that into account. The broader market participation, for me, that's heartening. The second day running, you had the broader markets that outperformed because the mid-cap and the small-cap indices, they did better than what the Nifty did. Will they continue? Will they continue to fire? Remember, they were underperforming in the previous week. So the broad breadth of the market, if it can improve, well, or it can relatively outperform the Nifty, that'll make portfolios feel a lot better. Now, in the cash market, the institutions, the net bought more than 1,000 crores odd. In the F&O market, well, the Qs are bullish. They added longs, they wrote, puts big time. So that combination is normally rather bullish. And they added close to 15,000 long contracts yesterday, and they wrote close to 80,000 puts. That's in the ratio of 3 puts for 1 call. You like that. Where was the writing seen? 18,500 put, 18,600 put. The total open interest built up between both of them is around 65 lakh shares. The premium out there was around 50 to around 90 rupees odd. So that's giving you a sense that at lower levels, we could see some bit of a support. However, on the upper end as well, the 18,650 call and the 18,700 call. At both these two strikes, there were 14 lakh shares added each. So close to 28 lakh shares were added at both these two strikes. So that brings us to the levels then that we're looking at. You plug in these numbers, looking at the options data, and you get a support at around 18,400 to around 18,450 odd. However, I see resistance at around 18,650 to around 18,700. Yesterday's high was around 18,620, so that becomes a bit of a resistance zone as well. The Nifty Bank, well, the 43,000 put and call was very, very active. I'm just taking the premium together, it's around 400 rupees. So if someone was, writing that, looking at that, writing the 43,000 put as well as the 43,000 call, then you have that 800-point band. So that's the crucial level. A break beyond each of these sides, either 42,600 or on the upper band, 43,400 will be crucial. For starters, SGX 50 suggests a dip. At some point of time during the day, it will become a buying opportunity, and buy on dips has worked. So don't change that. Maybe around 18,450 odd, that will be a good entry level. Prima, what else?
Well, you know what they say about buy on dips, right? All past recessions or turbulence looks like opportunities, and all impending ones look like threats, right? And Indian markets have really climbed all the walls of worry in the last 1 year to get to the levels that it has. So perhaps, if anything, all the turbulence, if you treat it as truly a buy on dips, in hindsight, you realize that it's just an opportunity.
And
but
full marks, Rima, to the retail investor out there. They have shown the faith out there, patiently, and they're riding well now.
Absolutely. The SIPs have been at record high levels month after month. It's only been picking up. So this all-time high perhaps belonged to India's retail investors and the financialization of saving. But a quick word on crude prices. Now, crude prices made big swings yesterday. It swung in a 5 percentage point range. So first, it dropped to levels of $80.6 per barrel on Brent crude. This was on concerns that China's demand is weakening, etc. And then it rebounded all the way to that $83.5 per barrel that we are currently on rumors that OPEC Plus is considering a production cut, which will boost prices. The OPEC Plus will be meeting on 4th of December. That's next Sunday. So watch out for this meeting very, very closely. So keep your eye on crude. It's rebounded a fair bit from the lows that it had yesterday. But let's get to the calls from the wise men about what next.
Oh, absolutely. Across asset classes, Rima. So Chetan Sheth of Nomura remains of the view that while China's path to reopening and moderation of US inflation provide reasons to be more optimistic on stocks looking towards 2023, but it still does not appear to them if it is time to turn outright bullish given uncertainty on the path of China's COVID outbreak and the Fed's policy path.
Some money market views now. Bhaskar Panda of HDFC Bank says overnight the dollar index looked up a bit post the hawkish commentary from some of the US central bankers. He says everyone will be watchful of comments from Fed Chair Jerome Powell on Wednesday. Meanwhile, he adds oil remains subdued and Asia ex-Japan sentiment soured due to the China events. He says Indian currency markets will take cues from global backdrop, and he expects the USD INR pair to trade in a range of 81.5 to 81.7 against the dollar for the day.
On bonds, Bhaskar Panda says that bond yields in India have been trading in a lower range following lower oil prices and lower yields in the US as well. He expects the 10-year benchmark bond yield to trade in the range of between 7.25 to 7.3% for the day.
Well, we have a lot of stock-specific action to track for you, and we'll get to that in just a bit. In our special Top 10 segment, we're looking at Fusion Microfinance, Lupin, NBCC, Lumax, BSE, Ami Organics, NDTV, Apollo Tyres, and JK Tyre. They are stocks on the back of positive news flow. On the flip side, you have Five Star Finance. That's the stock that's likely to open up in the red.